We've been getting a lot of questions lately regarding interpreting an analyst report and then proceeding to properly apply it to your own research. So I have Salman here with me, and he's going to explain what to look for in the report and then how it applies to you. Thanks for joining me, Salman.
Thanks for having me.
So what I've done is I've pulled up more Canadian equity as an example, and you actually wrote that report.
That's right.
So what I wanted to do was start with the 5 Ps. Morningstar, that's the criteria that the fund analysts use. So why don't you tell me about those?
Sure. So the 5 Ps are what we call the 5 pillars. And like you said, that is where we focus our research on when we're doing our analysis. So the 5 Ps include parent, people, process, performance, and price. And these together would make up the 5P.
Okay, great. So why don't we start with the people section? Now, does that just cover the managers?
Oh, well, the managers are definitely a very important part of the analysis, but we also go beyond just the managers. We want to understand as much as we can about the entire decision-making process and every aspect of how that decision gets made. So we'll talk to the associate or assistant portfolio managers as well. We'll try to speak to the equity analysts or fixed income analysts or the risk team. Whatever team supports the portfolio manager in the decision making, we'll try to have a chat with them and try to discuss the process and try to understand if there's any advantage that people have over the peers.
Okay, great. And then we have the parent section.
That's right. For the parent section, we draw on our stewardship analysis. In this, we're judging if a fund sponsor's policies help align portfolio managers with unit holders. So we'll look at things such as the personnel turnover, the firms have faced, the overall transparency, the kinds of fund launches the firm does. Are they the flavor of the month, or are they consistent with the firm's expertise? We also look at how the portfolio managers are incentivized to see if there is alignment between the incentives and the unit holder experience.
Okay, great. And then we have 2 for process. We have the process investment approach and process portfolio positioning.
That's right. So in these sections, we look at the advantage the investment process may have over other funds in the category. We analyze things such as the idea generation, portfolio construction, risk management, amongst others. We want to see if the process is consistent with the objective of the fund. A process may be perfectly sound, but if it's a small cap fund and the process has a bias towards large cap stocks, then we'd be negative on that process. The portfolio positioning looks at how that process is being applied to the fund right now, so in the present. So, is it consistent with the overall process? What kind of sector weights, what kind of positions, what kind of risk exposures does the fund have? And is that consistent with what the stated objective and the investment process is?
Okay, great. And then we have performance. Now, for performance, what are your guidelines? So, for example, since a fund with an inception date of 20 years or more is rare, are you stuck to only looking at the 3, 5, and 10-year returns?
Well, we're not just looking at returns since inception. We want to know how the current manager has performed. So we're looking at the performance of the manager's tenure on that fund. And we're not just looking at absolute returns. We want to see the risk-adjusted returns. So to understand the kind of ride investors have experienced on the fund and the kind of ride they may experience going forward. And performance isn't just returns, though. It's correlations, it's Sharpe ratios, tracking error, drawdowns, capture ratios, etc. There's also managers that have only been on the fund for a short period of time. And for those managers, we look at other funds that they have been on, either lead or maybe associate or assistant portfolio managers, to get some indication of the track record they've built up during their time managing the funds.
And next up, we have the price section, and I'm assuming it's a deeper analysis than just the MER.
Yeah, it is a deeper analysis. So we're looking at how the MER ranks relative to its category in its distribution channel. So a positive score in the price section implies that the fund ranks amongst the top quartile of funds in its distribution channel and in its specific category. And negative would be the most expensive quartile. And we're not just looking at MER, we're also looking at the trading expense ratio as well. That's also a cost that's borne by the unit holders. So if the fees if there's a new manager on the fund and he's indicated or she's indicated that the portfolio may increase higher portfolio turnover, well, we try to make the investors aware that this may cause an increase in the trading expenses that the fund incurs. Another thing we're looking at is the trend of the fees. So we like to see fees come down as the asset level increases of a fund. And we pay particular attention to fee increases that are correlated with an increase in asset. That usually raises red flags for us.
And I'm assuming the Morningstar opinion section, which is usually found near the top of the report, just summarizes the 5 Ps that we discussed.
Yes and no. The opinion section is intended to explain the thesis behind our Morningstar analyst rating. It should give investors a clear indication of why their rating is what it is. And we encourage our readers to examine the entire report rather than just specific sections so that they fully understand how we came about our opinion. Now, the analyst rating, the analyst ratings range from gold, silver, bronze, neutral, to negative. The 3 metals, gold, silver, bronze, are an indication that analysts believe that this fund has some advantage that will cause it to consistently outperform its peers over a full market cycle. And the difference between the gold, silver, and bronze is our level of conviction in that manager. So a gold analyst rated fund would imply that we believe that this fund has the highest level of conviction in the manager's ability to outperform. Neutral rating is quite self-explanatory, I think. It just means that the fund is going to not necessarily outperform or underperform its peers. But a negative rating implies that we believe there is something fundamentally wrong with the fund that will cause it to underperform its peers.
Okay, and last but not least, we have the star rating, which is always located at the top of the page, right beside the name of the fund.
And that's right. While the analyst rating is a forward-looking assessment, the star rating is a backward-looking assessment. And it's also a measure of risk-adjusted returns. And it's comparing the risk-adjusted returns relative to its peers in its specific category. And think of it like a report card. I think that's a good way to understand what the star rating's purpose is. When making investment decisions, we always encourage investors not to look at each one of these tools, star rating, analyst rating, or stewardship grade, in isolation, but they should be used together to make whatever investment choices investors are looking to make.
Great. Thanks so much for taking the time to do this, Salman. I know investors will appreciate it.
Anytime.